Hello and good morning, everyone. Welcome back to Eldercare's weekly webinar series. I am Adrienne Ostris. I am the Digital Marketing Director here at Eldercare, and we have a very special guest on with us this morning. We have Bella with Heartland. Good morning, Bella.
Hello, good morning. Thank you for having me.
Absolutely. We are so grateful for you to take out the time and talk to our agents about the full Heartland portfolio. I know we do a lot of product specific trainings, but sometimes it's really good to paint that big picture of Heartland. So we appreciate that.
Absolutely. Absolutely. Well,
And
I'm thrilled to be here.
And before we get started, just a few housekeeping things. Good morning, agents, right? I see all of you jumping on. Adam, Anthony, Josephine, Lawrence, Mike, Katrina in the house. Good morning. Thank you, agents, so much for taking the time to be here this morning. I know it is a crazy time of year as we're getting ready for the busy season, but we absolutely appreciate you taking the time to be here with us this morning. We want this to be a conversation, okay? We do these live because we don't want to just sit here and present things and then it just you forget it by the time you're you're done. We want this to be a conversation. So please find the Q&A box if you're on Zoom and then the comment box if you're on Facebook and let us know where you're watching from. I'd love to know where our audience is from this morning. We have agents all over the US. And then also, if you are already writing ancillary products or not writing ancillary, or if you've heard of Heartland, we would love to know, like, is this your first time learning about Heartland or you have it, you need to be learning more before you start selling. So far we have two in Georgia. That's awesome. I know Mike's in Oklahoma. And I don't see any more questions coming through, so I'm going to go ahead and let you take over, Bella, so we can get this training started.
Perfect. Let's do it. Well, thank you, Adam. I'm excited for you to hear about Heartland as well and excited to be here. Um, Anthony, looks like you're in Maryland. Good news for you. We just recently launched our new cancer, heart attack, and stroke product in Maryland. So an additional state ready for you.
That's a great way to kick off the training.
Absolutely. So thank you so much for the introduction. If you're a second late jumping on, my name is Bella Steckity. I am your broker sales manager here at Heartland National and really your direct point of contact and a resource to you however you need to use that. So if it is product questions, if you need additional training, I'll make sure you have my cell phone number. That way, any questions you have moving forward, if you need to text me something quick, call me, email me, whatever works best for you. Always happy to help and really just looking to support your success in the ancillary space as well as the annuity space if that's an area that you're looking to dive into or have gotten into already. So I'll start with just a quick background about Heartland National. We won't bore you with all of the details going back to 1960, but we started with the Medicare supplement. Since then, have diversified into more of the modernized products within the ancillary space. So introducing a hospital indemnity, and then a short-term home health care product, and lastly, our cancer, heart attack, and stroke product, which started in just 10 states last August. We've slowly expanded our footprint across the nation. We have also expanded into the annuity space. We currently offer a multi-year guaranteed annuity. And exciting news, we're getting ready to launch a fixed indexed annuity here in the next month or so.
I'll give
So
you a
very
clap for
excited there.
you.
Yes, let's do it. Let's do it. So we have done a lot of internal trainings on the annuity side, starting every morning here with fixed indexed annuity training with our VP of annuities. So we feel really confident going into this new season with a new product that we have the ability to service you as an agent. If this is a brand new space for you, you have the opportunity to reach out to one of us directly. We can get on Zoom, run illustrations for you, whatever that is. So if annuities is something you've been hesitant to dive into, this is the place to start. We're really excited to offer this new product and again continue expanding our footprint on the annuity side as well. Along with that, we'll have a new hospital indemnity, kind of a revamped version of our current product launching in the next several months. As I have more information about that launch date when we will have the product available, I'll be sure to let Adrian and the Eldercare team know. That way we can get all of that necessary information out to you. And then for a sec, looking at how we operate as a team here, we come from the IMO side. If you're familiar with Heartland Financial Group, our owner actually built up that marketing agency in the insurance industry. So coming from the marketing side, from the agency side, we know what your day-to-day looks like as agents, right? What the struggles are working with carriers directly, maybe some of the challenges you've had, what success looks like, and what you really need in order to find that success. So for that exact reason, we've tried to design our process to be as easy as possible for you. Having that direct point of contact, having my cell phone number to call me if it's 8 o'clock at night, whatever, I don't care. I'll give you a call and we can have a conversation. Having personalized training, so knowing what your experience is in the ancillary space, and how we can best fit into your product portfolio and best support your needs as an agent. We have an in-house agency services team. When you're calling someone in our office, we're all in Kansas City. So you're not calling someone overseas or across the country or whatever that may be. We also have an in-house development team. So our agent portal and our e-apps are developed in-house. So really with all of this, having us all in the same office, that allows us to have a really strong internal communication. If you have a glitch in your agent portal or you need to get back into an application, I'll walk down the hall and get a link from our developer. I don't have to submit a ticket to some third party or again, whatever that may be. So allowing us to have that strong internal communication, we can in return have a strong external communication with all of you.
That's
So,
big. That's really big. Like I mean that's kind of how it is here at Eldercare too. Like if we need something, we just walk down the hallway and we can get it.
absolutely.
Yeah.
Yes, so you know exactly what that's like. It makes the biggest difference in how you're able to service your agents and clients, just knowing that everybody's in one place and you can have a conversation pretty quickly.
Yes.
I love it.
Exactly. And you have Katrina mentioned that she's trying to figure out how to introduce the products, and then Moon said Bella is amazing.
Oh, well, thank you.
Bella is amazing. Thank you for saying that. We
I always love the kind words. I appreciate it. Thank you
it's
so much.
relate I mean, this is a relationship business, whether it's with your clients, your carriers, your FMOs. I mean, this is the greatest industry ever.
Right, right. We always say that relationships are the currency of our business. That's
Mhm.
that's where it all starts and that's where it all ends, is building relationships with all of you and your clients and building that level of trust, that you may not find somewhere else. So I'm again just really excited to get into the products and mentioning how someone is curious on how to introduce the products. My
Mhm.
goal here is to start with some of the product features. So that way you feel prepared and confident selling, that you know the benefits, you know how the pre-X works, how the underwriting process works, so on and so forth. So bear with me while we go through the features. I know that that can feel a little draining getting so much information thrown at you, but at the end of today's presentation, I'm going over the sales process. So again, our goal, having several licensed insurance agents in our office who hold their own books of business, we again understand what your day-to-day looks like, how we can fit this into your sales presentations, and how you can really identify the needs and help your client to understand how this product is a solution for them. So I have sales tips for you. I have effective questions to ask, how to overcome objections, some example objections, so on and so forth. So we will dive into that. So starting with cancer, heart attack, and stroke, this is our current availability map. We just recently launched in Montana, Maryland, and Virginia. So Virginia is live now, not only approved, but it should be in orange here on this presentation. So all of those orange states are currently available for you to sell. And I like to take a moment on this slide here. I think as I've had the opportunity to train agents on a product like this, I've also learned their testimonials and personal experiences, how a product like this can change someone's life or change their family's life or change the trajectory of their treatment, whatever that may be. So I'll share one of those with you. I was speaking with an agent one-on-one. He shared with me that he lost his son to cancer 3 years ago. Sometimes this gets me choked up. So he shared that his family was living in New Jersey, and his son was sent to the University of Iowa to receive treatment for the aggressive form of cancer that he had. So not only were they paying for the treatment alone, but for their son to live out of a hotel and travel to and from the hospital, and then for their family members to fly back and forth and support him while he was going through treatment while still maintaining their full-time jobs in New Jersey so they could afford all of these costs, right? So I think that this story really resonated with me, knowing that when an individual thinks about the costs associated with cancer, they're thinking about this top bullet point, their deductible, their co-insurance, co-pays, maybe their medications. What individuals don't consider or don't realize are associated with that diagnosis are the non-medical costs, right? The travel and lodging, if you are sent to a different state, you're living out of a hotel, you have plane flights, you have Ubers to and from the hospital. None of that is covered by your traditional insurance, whether that's Medicare, MedSup, Medicare Advantage, if you're on an employer plan, whatever it may be, right? These are all non-medical and all out-of-pocket exposures. That same individual, when the chemotherapy wasn't working, they chose to transition into an experimental treatment, which again, as we know, is almost never, if ever, covered by a major medical plan. So this was a completely out-of-pocket cost for them. So I think that this kind of opened my eyes, and I hope that it's opened your eyes as well, how a plan like this is flexible to use however the client needs it. So we'll dive into how those benefits work, but I wanted to take a moment to just share that story as I know it resonated with me and again, kind of changed my perspective on how the deductible isn't the only cost you're going to see, right? So starting with the rate structure of this product, it's issue age rated. This is a huge selling point right off the bat. These premiums do not increase as the client ages. If they apply at 45 years old, their premium is that 45-year-old rate for the lifetime of the policy. We have 4 coverage types: individual, a couple plan, single parent family, or family plan. So you can claim dependents under the age of 18 on these plans. Third bullet point is something really unique to Heartland National. We calculate our premiums based on the age of the youngest spouse. As long as that youngest spouse is the primary applicant, that's what we will use to calculate premiums for those couple and family plans. We actually recently had a case submitted where the husband was 67, his wife was 35. So we took that 35-year-old premium rate on their couple plan. And then again, that's the rate they keep for the lifetime of the policy since it's issue age rated. So that can make a huge difference in the cost, knowing that we will calculate with the youngest spouse. Some carriers will require that you use the older spouse of the two in order to calculate premiums. Rates are also unisex and uni-tobacco. We don't ask any health questions about the use of tobacco or charge an additional premium for that reason. That's also something pretty rare to find on a cancer and on a heart attack and stroke policy. Premium payment modes are the exact same as any of our other plans: semi-annual, annual, quarterly, or monthly via a bank draft. We have direct bill available on paper applications as well. And next, I know this slide looks a little daunting, but it's nice to have it all in one place for you. When you're choosing a base plan for this product, you'll choose either cancer or heart attack and stroke. That doesn't mean you can't get coverage for both if you choose one as your base plan, and then you add the second one on as a rider there. The premiums don't look any different whether you have it as a base plan or a rider. The one thing that may help you make that decision of which one to make the base is this row right here, that the rider benefit amounts cannot exceed the base plan benefit. So if you have selected cancer at $20,000 in a lump sum as your base plan, your riders can only go up to $20,000. So you'll want to make the highest benefit amount that base plan, so your rider benefit amounts fall under that. Issue age window is 18 to 90, again, claiming dependents under the age of 18 on those family plans.
90?
Go ahead.
90?
90 years old, that's right. And then along with that, it's guaranteed renewable for life. So the individual can keep the plan well beyond 90 years old. They just apply within that issue age window. Absolutely.
Wow.
And then the lump sum benefits range from $5,000 to $75,000. And of course, that's paid out in a lump sum upon diagnosis or other qualifying event, which we'll get into. The pre-X on this product is 12 months. So any claims filed within the first year of the policy related to a pre-existing condition wouldn't be covered. Then we also have a 2-year contestability period. If a claim is filed within the first 2 years, we would pull medical records just to make sure that they were truthful on the health questions when they filled out that application. So as long as that comes back clear, there's no evidence to show that they lied on one of those health questions, we proceed with paying the claim right away. Then the waiting period, a 30-day reduction schedule for cancer. So if cancer is diagnosed within the first 30 days of coverage, we would pay 10% of their benefit amount. versus 100% after those initial 30 days. And then it's a waiting period for heart attack and stroke, so no benefits are payable within those initial 30 days of coverage. And we'll get into the recurrence and restoration benefits here on the next slide. But just to give you an idea, this is built into our base plan. With a lot of carriers, you'll see this structured like a rider. So you're paying an additional premium in order to add on those recurrence benefits. Ours is again built in, gradually restoring on a 5-year scale. If you do see it's built in with another carrier, you may see that they have a 10-year scale. So it's taking a full 10 years to build back to 100%. Again, ours is built in on a 5-year scale back to 100% there. Any questions on this slide here before we continue?
I don't think so. That's a great slide though.
All right. We will keep going here, taking a look at the base plan first. Again, you're choosing cancer or heart attack and stroke. You can add the second one on as a rider. Looking on the cancer side, we cover internal cancer at 100% of their benefit amount. Please note that this includes melanoma. I know melanoma can be considered a form of skin cancer, however, it is invasive, does require treatment, so we classify that as an internal cancer. Carcinoma in situ is known as stage 0 non-invasive pre-invasive cancer. We cover at 50%. And then skin cancer, what we classify as the basal and squamous cell diagnoses, something like getting a mole removed that's cancerous, that would pay 5% of their benefit amount. Then on the heart attack and stroke side, we cover heart attacks, heart transplants, and strokes all at 100%. And then we also reward preventative measures. So a heart valve replacement and repair, aortic surgery, coronary artery bypass all at 25%, and then an angioplasty and a stent at 10%. Now, looking at those built-in recurrence and restoration benefits, right? This gradually restores back to 100% on a 5-year scale. This restoration period doesn't begin until 100% of the benefits have been paid out. And I want to note here that the skin cancer benefit, that 5% benefit, is completely separate from your internal cancer benefit. This is payable 3 times within the insured person's lifetime. And in the event that that individual has a basal cell skin cancer diagnosis, they're paid out 5%. Then within that same year, they're diagnosed with internal cancer. This does not mean that they're only receiving 10% of their benefit. It doesn't even mean that they're only receiving 95% of the benefit because they've already been paid out 5%. Since that's completely separate, they would still be paid out 100% for the internal cancer benefit, even though that's occurring within the same year that they've already been paid 5% for skin cancer. Right? So after 100% has been paid out, that's when that restoration period would begin, gradually restoring back to 100% on a 5-year scale. Got it? Any questions here?
No, that makes sense to me.
Adam, absolutely. I'll have a copy of the slides that will be sent out to you all. Awesome. Great. So now looking at the riders, we have 4 riders available on this product. First being the benefit builder. This increases the base plan benefit every year for up to 35 years. You have 3 increase options available, 500, 1,000, or 1,500. This is an example here actually directly from our brochure. Sherry's 40 years old. She has a $20,000 cancer base plan, adds the $1,000 benefit builder rider. 20 years down the road at age 60, she's diagnosed with breast cancer. At that point, instead of receiving $20,000 that she would have gotten from her base plan alone, she received $40,000. She completely doubled her coverage because of that benefit builder that was adding $1,000 to her base plan every single year. This is a much more affordable way to increase coverage over time. It's inflation protection. If you kind of compare premiums in the e-app, if you start with $10,000 and add the benefit builder at $1,000, it's almost half the cost of starting with $30,000 or especially $40,000 right off the bat. So again, a much more affordable way to increase coverage over time, knowing that it's issue age rated and that premium isn't going to increase over time.
Yeah, I'd be interested to see the rates. Might
Absolutely.
just run a quote after this.
Yes. Yeah. And if we have time, I'll jump into the e-app and just have you take a look at that. Next, we have the return of premium rider. This is something that's we found to be extremely popular among clients and agents that have applied for this policy. This returns all premiums paid for the base plan and any of the additional riders, minus any benefits that were paid throughout the lifetime of the policy. So one of the most common objections we see with this product is what if I never need the benefits? If I never have a cancer diagnosis, if I never have a heart attack or stroke, I've invested all of this money in premiums that I never needed, right? So this return of premium rider adds the additional safety net, knowing if I never see that $20,000 check for my lump sum cancer diagnosis, I can get all of my money back. So we have two options for the return: a return upon death, which would return the premiums to a beneficiary upon death of the policyholder, or a return of premium upon 20 years. So 20 years after the effective date, this would return the premiums directly back to the policyholder and it would terminate the coverage from there. So yes, this premium adds an additional, or this, excuse me, rider adds an additional premium on the front end. They may pay an additional $15, $20 a month, but now again, they have the additional safety net. They know that they're getting a check either way. If they have that serious diagnosis, they get paid their lump sum. If they go 20 years or up until death without a serious diagnosis, they can get that money back. Any questions about this one here? Cool. Critical illness rider. The goal with this rider is to expand coverage to critical illnesses that go beyond just cancer, heart attack, and stroke. So coming along with your CHAS plan, cancer, heart attack, and stroke, you don't have to write a separate critical illness policy, right? You can add this rider on here that also pays out in a lump sum for specific diagnoses. You can see we cover Alzheimer's, dementia at 50%, and then the remainder of these critical illnesses all at 100% of their benefit amount. And then last rider here is chemotherapy and radiation. You may have seen cancer policies in the past that act kind of as itemized benefits, right? When you have the diagnosis, you're paid a smaller amount, and then when you receive chemotherapy, you may get a certain amount, and radiation a certain amount if you have a procedure, a hospital stay, whatever that is. So the goal with this rider, again, is to have that lump sum up front. When the individual has the diagnosis, they receive their lump sum from the base plan. Then this rider continues to pay as long as they're going through treatment, right? So we have three plan types: essential, enhanced, and comprehensive, covering a variety of cancer-related treatments or procedures. A couple that I want to point out being an anti-nausea drug. I spoke with an agent whose wife had gone through breast cancer treatment. He said not only was this drug an absolute necessity while she was going through treatment, she couldn't have gotten through without it, but it was also expensive. And if we could have had an extra $200 coming in a month just because of that anti-nausea drug alone, that would have been a game changer. And then that bottom row there, we talked in the beginning about how experimental treatment is almost never, if ever, covered by your traditional plan. So this provides daily benefits if you do decide to go through an experimental treatment. So now I want to take a moment to pause before we get into the short-term home healthcare product. If anybody has questions about cancer, heart attack, and stroke, specifically how a rider works or anything like that.
I don't see any questions coming through, but I know there's sometimes a time delay. So if anyone does have any questions specific to the cancer plan, please ask them. You know, we want you to leave confident this morning in these products. As far as the riders go, I think some agents normally ask, and you have to add the riders at the time of the application, right?
Yes. Yep.
That's the only time to add them.
Right. You can decrease benefits at any point. So if an individual wants to drop off a rider or decrease their lump sum benefit, you can call into customer service and make those adjustments. You can also reach out to me directly. I can help you make the adjustments. But in order to increase benefits or add riders, that would require a new application.
Okay. And then are you going to cover any underwriting kind of
Yes,
questions?
I'm happy to. And I think I might just dive into the e-app and give you a look here. So going to our cancer, heart attack, and stroke e-app, you can run quotes, have those saved here. In progress applications, you'll see all of my product presentations as we're going through. And then of course you can see the complete applications as well. So if we run a quote here, let's do a 64-year-old turning 65 this month. We'll do Missouri for the time being for an individual bank draft, starting with cancer as our base plan. So you'll notice if we start with $15,000 as the base, our riders can go up to $15,000. If we drop this down to $7,000, our rider can only go up to $7,000. So again, rider amounts cannot exceed the base plan benefit. If we add some heart attack and stroke coverage on here, return of premium, radiation. We'll add critical illness so we can take a look at those health questions as well. And while I'm in here, I'll just give you a quick look. So see, if we start with $10,000 of cancer coverage, add on the benefit builder rider at $1,000, we're looking at $4,115. So we know 30 years from now, your base plan is now $40,000, right? It's been adding $1,000 every year for the past 30 years. Versus if we take this off and
And the
start at
premium would have stayed,
$50,000, what was that?
and the premium would have stayed $41.
Absolutely.
Okay.
Yep. So that's not increasing as the client ages. Versus starting with $40,000 right off the bat, we're looking at $104 a month. So it does make a huge difference to add that benefit builder to increase the base plan benefit over time. Please note that we don't have an application fee on this product. So with home health care and hospital indemnity, you have that $25 processing application fee that's charged with the first month's premium. This product doesn't have that. So if an individual, you'll see that the benefit builder rider only applies to the base plan. So cancer versus heart attack and stroke. If you have an individual who wants cancer and heart attack and stroke benefit builders, this is the only time that I would recommend separating those into two separate policies so you can add the benefit builder for both heart attack and stroke and cancer. Again, it's no disadvantage to the client since there is no application fee, but there's really no other purpose to have both of those or have those on separate policies other than wanting the benefit builder for both. So if we save and start the application, we'll take a look at the health questions. This is something that I didn't note right off the bat. We run a prescription drug check at the time of application with this product. We use Milliman, the third-party database, and we have an automated system in place that automatically approves policies. So if an application comes through, there's no declinable, questionable, red flag drugs, you may see approval right off the bat. If you don't see that right off the bat, you'll see that the status is awaiting manual approval. It's sent to the desk of one of our underwriting team members, so you know a computer system is not using logic to automatically decline an individual for the wrong reasons, right? So a real human is taking a look at the application, their drug history, and making that decision. So you can download our agent guide straight from here. You can also upload a doctor's note if you have one for maybe the reason an individual is taking a specific medication. I want to note with the declinable drugs list, we understand medications are not one size fits all, right? Combinations of drugs mean different things, dosages mean different things. Medications themselves have several different purposes. So for example, spironolactone right here is declinable for heart attack and stroke coverage. It can be used for high blood pressure, heart disease, or heart failure. However, it can also be prescribed by a dermatologist for acne. So just because an individual is taking one of these declinable drugs doesn't necessarily mean they will be declined for coverage, right? So you can always reach out to me directly if you're submitting an application, you have a question about a specific medication, let me know, hey, I have an application that was sent for manual approval from your underwriting team. She's taking spironolactone prescribed by a dermatologist for acne, or she's taking propranolol for anxiety. I will walk down the hall and go talk to the underwriting team myself and say, hey, we need to take a look at this application. I just spoke with the agent. Here's the reasoning. And those are handled on a case-by-case basis. Sometimes they will require a doctor's note in order to approve that coverage. Other times it's just a matter of getting the client on the phone and certifying that they don't have heart disease or they don't have lupus or whatever it is. So just to give you an idea, I'm always willing to work with you to make that application process and prescription drug check as smoothly as possible.
That's amazing, Bella. I mean, these plans are so important, and I feel like sometimes agents do get discouraged, with underwriting and having to go through, you know, some work to get a policy approved or to see if it gets approved. And so I just love that you're dedicated to helping them, every step of the way of getting an app approved. So thank you.
Absolutely. Well, yeah, that's what I'm here for is to make sure you have what you need. Again, coming from the marketing side, we like to say that our goal is to just be an extension of you as an agent and an extension of your agency. So anything we can do to help on the training aspect or communication aspect, that's our ultimate goal here.
That's awesome. And I know we're kind of, I know we like to keep these to 30 minutes. I know we're at time, so I understand if folks got to go, thank you for being here. But I'm going to let Bella keep going because all of you are still on. So as long as you are all still on, Bella, you have the stage. And we actually had a few questions pop through. Anthony had asked if we're going to send a portal link and a contract to get signed up. So yes, of course, if you're interested in selling, these products, we are going to help you get set up, and we're going to give you all the links and resources you would need to start selling. And then Josephine had said, great presentation. She was going through the website, but can't find a certification. So that kind of might present a good question for you, Bella.
Yeah. So all you need to sell any of our ancillary products, cancer, heart attack, and stroke, home health care, and hospital indemnity is all through our health contract. So that's having your health license. Our contracting process takes less than 10 minutes. And then our agency services team typically has agents approved, has that contract approved on the same day, if not 24 hours later. So only time you may see a longer wait is if you submit that on a Friday evening, you'll see that approval on Monday morning. So we
So
try
no
to,
certification.
yes, yeah, no additional certification, just your health license is all we need.
Yep. And then she said she saw where she could manage a personal website. And then we had Stephen also ask if there's an app and a personal agent website as well.
An app and so the agent portal is what you would use to access the e-apps. Once you go through the contracting process, you'll receive your writing number, use that to log into the agent portal, and then you have access to everything. We have resources, we have training videos available, we have marketing materials available, all of the e-apps, of course. So that will be your hub for everything you need within Heartland National. And again, that's developed in-house. So if you ever have ideas, we welcome those. If it's something that you maybe don't have access to that you'd like to see in the future, that's of course always something that we can implement.
Awesome. Thank you for answering those. I'm going to let you keep talking about underwriting because
Of course, yeah. And I won't go through these questions in specific,
right.
but just to give you an idea, it's a 5-year look back for a previous diagnosis or treatment of cancer. This does not include basal and squamous cell. So if someone had that cancerous mole removed last year, they can still qualify for this plan. What we're looking for here is an internal or carcinoma in situ diagnosis. Heart attack and stroke, it's the same thing. 5-year look back for a stroke, a TIA, so transient ischemic attack, or a heart attack.
That's
And
really
then
impressive. Just 5 years?
just a 5-year look back. I know a lot of policies you'll see a 10-year look back.
Yeah. Yeah.
Yes,
10 is more popular. So
right.
that's
And
great.
then with things like the height and weight chart, through that agent guide, I know I skipped all the way down to the declinable drugs. We do have a height and weight chart available for you. So that kind of gives you an idea if an individual will qualify before you even go through the underwriting process. Awesome. So I'll jump back over here and go through our short-term home healthcare product. I want to make sure we have time to get through those sales skills here at the end. So I'll go through the benefits slightly and then we'll get into the sales process. Adrienne, are we good to go until 10:30 Central?
You are good as long as everyone is still on here.
Okay.
Yes,
All right.
ma'am.
Well, sounds like a plan. If you need to cut me off at any point, feel free. I know I can get to talking, that's for sure. Okay. So, state availability. There are several states that require short-term care products to look like a long-term care product. So, states like Kansas, Florida, Kentucky, unless they change their rules and regulations, we likely won't see this product to be available in those states since it is short-term care. Starting with kind of the product highlights and just giving you an idea, issue age window on this product is 40 to 85 years old. So a little bit of a smaller window there. And then for the rate structure, it's attained age rated. So the rates increase in 5-year age bands. I'll show you where to find that rate sheet to give you an idea. But I think as we get through the base plan benefits of this product and you start to understand how an individual can start benefiting on day one, it'll make sense why these rates do increase in the 5-year age bands. We also offer a 7% household discount if the individual lives with anyone over the age of 18. I know some carriers require it to be a spouse or they require a dual application. So you need 2 individuals applying in order to have that household discount. That's not the case for us. If they certify that they live with someone over the age of 18, if it's a roommate, a daughter, a sibling, a spouse, whatever, then they qualify for 7% off of their monthly premiums. When you're choosing a base plan, you'll have the basic, standard, or complete, basic being the lowest level of coverage, standard in the middle, complete that highest level of coverage. We'll dive into some table breakdowns that show you exactly what that looks like for each plan, but know when you're choosing the base plan, you have home health care benefits, home health aid benefits, and prescription drug reimbursements. The pre-X on this product is 6 months, and it's a 2-year contestability, just like cancer, heart attack, and stroke. Guaranteed renewable for life. You can write these policies up to 60 days out, so effective date being up to 60 days out from the application date. And then the next thing I want to mention, transitioning into the next slide, is the minimal underwriting process. So with home health care, regardless of your base plan or regardless of what riders you've added on, we have 3 to 4 health questions. And that's exactly word for word from the application, what I have right here. For the basic and standard plan, you have 3 health questions. For the complete plan, you have 1 additional health question. There's no prescription drug check. There's no medical background check, anything like that on the front end. This is simplified issue. So if you're able to answer no to those 3 to 4 health questions, your policy is automatically approved and issued. So again, not running any additional checks on the front end during the underwriting process, simplified issue, 3 to 4 questions. So fairly simple to qualify for here. In a nutshell, are you already receiving assistance performing your ADLs, activities of daily living? Are you already receiving home health care services? Have you been diagnosed or treated for a cognitive impairment, such as Alzheimer's, dementia, or memory loss? And then again, if you're applying for the complete plan, 1 additional question. In the next 60 days, do you expect to need home health care services? Do you have a surgery planned? Do you expect to be admitted to the hospital or some sort of nursing or assisted living facility? And that's it. Any questions so far on the base plan, the underwriting, the health questions, anything like that?
It's pretty,
On mute there.
yeah, sorry. It's pretty black and white and pretty straightforward on this plan.
Right. Yeah. And
Uh,
I think that this is in the
but
event
on it,
you have someone who can't qualify for a hospital indemnity, this is the perfect product to pivot to. I'll show you how you can add that hospitalization coverage still on a home healthcare plan without having the extensive underwriting from a HIP that you would see outside of a GI window.
I love that so much. Like it amazes me like how um agents can like take that next level in helping their clients, find a plan that they can qualify for and still get, protection for out-of-pocket costs. Like it's not
Absolutely.
just they won't qualify for this, so there's no hope for them. There's a lot of other options, and obviously Bella knows all the ins and outs.
Well, yeah, and that's
But
the
Monica,
best part about it is just having these products in your toolbox and having the ability to pull them out when you know an individual has 4 medications that they get filled every month, and you think, well, I can get you $60 every month just for those medications you're getting filled. You don't have to change a thing. So I know I'm
yeah,
jumping ahead of myself there, but
yeah,
again,
that's
having things in your toolbox to know where you can plug them in to best fit your clients.
yeah. And Monica was just asking, all the answers need to be no.
That's correct. Yes.
Okay. Moon had asked if there's a long-term care plan that Heartland does yet, but
We don't currently have a long-term care policy, no, just the short-term care. Long-term care, unfortunately, can be, and especially what we're seeing now in the market is it's difficult to qualify for and
Mhm.
it's expensive. And that's a premium that increases over time. So yes, the premium here will increase over time. You know the age bands. You know exactly what your premium will be 5 years from now. And also you can start benefiting on day one, receiving cash benefits. So again, we'll get into that. But I think as
do
I've done the analysis of a long-term care versus a short-term care policy. I'm like, this is a no-brainer. Even if you have long-term care and you have a 90-day elimination period, here's your cash benefits right here to help cover that care. So I think it's really interesting and you can kind of find a need for it everywhere, regardless of what plan your client's on, if it's Med Sup, Med Advantage, so on and so forth. So looking at home health care, 360 days worth of benefits with a 180-day restoration. If they use up all 360 days, they go into 180 days of restoration, and then those benefits fully restore to be payable again. That restoration isn't just one and done. that can continue to restore time and time again if they continue to use up all of their benefits. So these pay in cash up to a daily maximum amount, that being up to $200 on the basic plan, $400 on the standard, $600 on the complete. So if, for example, an individual has a stroke and they have a physical therapist and an occupational therapist both coming out to their house within the same day, on the complete plan, that's a $300 benefit for both of those services individually. So that would meet their daily maximum amount of $600, again, paid in cash directly to them. So on their MedSup or on their Med Advantage plan, they may have complete coverage for those services or a portion of those services covered, right? So in the event that they don't owe anything for the physical and occupational therapist for their in-home care, that's still $600 going directly into their pocket. They can use that money to put towards a caregiver. They can use that money to put towards additional home costs, whether it's lawn maintenance or meal services being delivered, whatever that may be. And then along with that, this plan offers built-in home health aid benefits. So like I mentioned, we likely see some sort of protection against home health care in their traditional plan. What we don't see any protection from, however, is the custodial care or the custodial aspect. The caregiver that comes out to help you get dressed in the morning and make your breakfast, clean the kitchen, pick up your prescriptions, whatever it may be. So this plan offers daily benefits for a home health aide as well, $50 per day on the basic, $100 per day on the standard, $150 per day on the complete, up to 120 days. We have an additional rider that you can add 60 days to that coverage, so bringing it up to 180 days payable. So again, if you don't need that money to pay for the home health care services, you can put that $600 per day paired with $150 per day towards the caregiver costs. I'll use a personal example here. My grandfather, my grandmother had passed away, so he was living alone. He had a pretty serious surgery performed and had two loving daughters who would have given anything to be there for him and support him throughout his recovery. However, they both had full-time jobs. They both had children to take care of, so they couldn't be there from 8 to 5 every day or 8 a.m. to 8 p.m. every day to support him with those daily tasks. So not only did he have a physical therapist coming out 3 times a week, and a skilled nurse coming out 3 times a week. So that would have been on the complete plan, remember, $300 per service. So 300 times 6 is what, $1,800 that he would have received in cash just for that one given week. Along with those professional services, he had a home health aide or a caregiver that came out to assist him with the daily tasks, the custodial care. That was around $35 an hour. So again, this is something you don't have protection from on your traditional Medicare Advantage MedSup, but something that in the event that you need home health care, you most likely need that home health aid as well. So they go hand in hand, and it is important to have that coverage and protection from both. And then the last thing here included in the base plan, this is everybody's favorite part.
Yeah, I was wondering when that was
reimbursements. Yes, here we are. And I know I've hinted to it a couple of times here. So we reimburse $15 for every generic medication, $30 for every brand medication up to an annual maximum. That's $360 per year on the basic plan, $720 per year on the standard and complete plans. A couple things about this, it starts paying day one. There's no pre-X, there's no waiting period. If they have a prescription filled on the day their policy is effective, they can file a reimbursement. And then second, it pays regardless of their copay. So even if we receive a pharmacy statement that's $0 across the board, they paid nothing for any of their tier 1 and 2 drugs, that's still $15 or $30 depending on if it's a generic or a brand name medication. So again, when you're setting this individual up for a Medicare Advantage plan or a MedSup, whatever it is, and you know they're taking 4 generic medications every single month, this is a way to start hinting at this plan. Well, I have a solution that could provide you $60 every month in cash just because of the prescriptions you're getting filled. And you don't have to change a thing. There's no network, so you can continue going to the same pharmacy. You don't have to change the names of your medications, anything like that. We'll just submit the pharmacy statement and you'll have a check mailed to your house. Simple as that.
And they could even use it to help pay for the plan.
Exactly, exactly. So to give you an idea here, the standard plan for a 65-year-old is $43.54 per month. The complete plan is $47.57 per month. So when that comes up to an annual total for their premium, it's around $516 for the standard plan, $560 for the complete plan. And that's $720 they can get back in cash, right? So again, that's where it comes in. And typically when individuals stop and say, where's the catch? How is this even possible for a plan? This is too good to be true, right? And again, I'll remind you, we have the attained age rates. So the rates increase in 5-year age bands. However, that $720 never goes away. They can continue filing those reimbursements every single year and receiving up to $720 back. Awesome. We'll get into the 4 riders here shortly. Hospital confinement, like I mentioned, providing that inpatient hospitalization coverage. This acts exactly the same as a hospital indemnity-based plan. You can go up to $300 per day in a daily benefit on the complete plan, payable for either 3, 6, or 10 days. It has a 60-day restoration, just like our hospital indemnity-based plan does. And again, for no additional underwriting. So if an individual doesn't qualify for a hospital indemnity, they're outside of a GI window, this is a perfect product to pivot to. They answer 3 to 4 health questions, and you can still provide them with that hospital confinement coverage. The ambulance rider pays between $100 and $500 per trip in an ambulance, up to 4 times per calendar year. This rider for a 65-year-old is $1 per $100 unit. So that $300 benefit is $3 a month. That's it. $500 benefit, $5 a month. I'm spending more on a Starbucks coffee every month than a 65-year-old would on that ambulance rider. And then last couple here, severe accident and accidental death, a $5,000 or a $10,000 death benefit, coming with a variety of dislocation and fracture benefits as well. This premium for a 65-year-old, that $5,000 benefit, $3 a month. And the $10,000 benefit is $6.01 per month. And then lastly, the home health aid rider. Again, we talked about how we have 120 days of home health aid built into the base plan. This rider, at 65 years old for $1.82 per month, you can add an additional 60 days to that coverage. So that brings your total up to 180 days of home health aid coverage. Any questions on these riders here?
Yes, we did have one from Adam. You mentioned that the client would have to submit for reimbursement on those medications. What would that kind of look like? Because some of their clients, are
Technologically challenged.
Yes.
That's a great question. And this is something that we've tried to make our process as painless and as easy as possible for you. So I'll dive back into the agent portal to give you an idea here. If we go to the supplies tab, select the state that we're selling in, you click home healthcare drop down, you'll find an RX reimbursement instructions guide. So if we download that and take a look, this walks through step by step. There's only 2 steps on there, really, exactly what you need in order to file these reimbursements. So all we need is a statement from the pharmacy. This will include the following information: the policyholder's name, the medication, the date of the fill, the charges, even if it's $0, and then the name of the pharmacy you received the drugs from.
So
From there, what was that?
So like a receipt?
It's similar to a receipt. Like, for example, when you receive a prescription from the pharmacy and they staple your receipt, which is just the little paper copy that may have the charges on there, then they also have that white slip of paper. That would be the pharmacy statement. So an individual may choose to just collect all of those and they can submit all of the white slips. Or if you're submitting maybe once or twice a year and you go to your pharmacy and say, hey, can I get a statement of all of the prescriptions I've had filled this year? They can provide you with that. That would have all of the necessary information on there. And then from there, we don't have a claim form necessary to attach with it. All we need is the pharmacy statement. You can submit this via email, fax, or mail. So in the event that an individual is technologically challenged, you may choose to help them out with this process. If that's taking a picture of the claim and submitting it via email, I would just suggest including the policy number, which is said here on step 2, in the subject of your email, or you can write it on the bottom of your pharmacy statement if you're faxing it in, whatever that may be. That way, if we have a John Smith that's submitting his prescriptions and we have 39 John Smiths with a pharmacy or with the hospital home health care plan, we know exactly which one to pay out there. So again, we try to make this as painless as possible for you. If the individual has any questions, we have the customer service phone number down here that they can, of course, reach out to ask questions.
No, that's awesome. And then that's just another touch point an agent can use to service their clients during the year, checking in, seeing if they've, used that rider yet, or if they need help using that rider. It's just a great way to stay in front of your clients. And Katrina, yes, that one is a rider that you would have to add to the short-term care plan.
So actually the prescription drug reimbursements are built in. So that's no additional premium with the base plan. So that $43.54 per month for the standard plan, you have the home health care benefits, the home health aid benefits, and the prescription drug reimbursements.
Oh, okay. So
that's all
not a rider.
in
It's all
that one
included
cost.
in the short-term care product.
Yes, yeah.
Specifically included in the base plan. Awesome. And then Adam asked, do you file each individual medicine, or can you file all at once per month?
That's entirely up to the client. So some choose to do each individually, some will do it at the end of each month, some choose to do it all at the end of their policy year, and they use the money to go Christmas shopping, if that's what it is. So that's again entirely up to them. And they can submit those as frequently or as non-frequently as they'd like.
Okay.
Saying a dependent should submit this or the agent. Anthony, either way, the agent can submit it on behalf of their client if they maybe need help with the technology aspect, or the client can submit these directly to the claims department themselves.
Awesome. I feel like we're going to have to send Adam some Heartland swag.
Oh, absolutely. I'm in for it. And then I'm going to skip past hospital indemnity. I know you all are familiar with how those plans work. We do have a revamped version coming in the next couple of months. So Adrian, if you haven't heard enough of me, maybe I can jump back on when we have those features available for you.
Yes, no, that would be better to talk about when it's revamped.
Awesome, love it. So the feedback I've received from most of my agents, and I know somebody mentioned it here in the chat, is as an agent, I know the plan is great. I know the benefits are great. I know that they would benefit from having this, and it'll protect them from their exposures, but I don't know how to bring it up. I don't know if I am automatically throwing a product or a brochure or an insurance company or whatever it is at the client, they automatically know it's an additional cost, right? They don't know what these benefits mean. This is automatically overwhelming for them and can lead to those hesitations or objections right off the bat. So to combat that, I really like the needs-based selling approach. How can we identify the needs of our clients? How can we ask the right questions, identify their out-of-pocket exposures, get them talking, and help them to understand and answer for themselves why they need a plan like this before they even know the plan exists. So as we start with identifying those needs, what are some of the sales techniques we can use? First, asking the effective questions. I'll go through a list here in just a moment, showing you how can we allow the client to understand and point out what their out-of-pocket exposures are. Second, identify those exposures on their summary of benefits. Walk through the Medicare Advantage plan and point out, this is your maximum out of pocket. Here's your coinsurance for chemotherapy. Here's what you would pay for home health care. Let's take a look. We have no protection from custodial care. We have no protection from the non-medical costs on a cancer plan, right? So identifying all of those and utilizing math equations. This is one of the most effective ways that you can help the client visualize, in the event that something happens to me, this is what I'm subject to paying, right? And of course, never with the intention of scaring clients into getting coverage, right? But our job as agents is to educate them and to help them understand, here are my exposures right now, and here's a solution I have that we can completely fill that gap for you. And then lastly, describing testimonials and personal experiences, kind of like what I did in the beginning of our cancer, heart attack, and stroke product, building that trust, the reliability, and emotional connection, and kind of again opening their eyes to how a plan like this could truly benefit them in the long run if something were to happen in the future. So from there, looking at those effective questions with hospital indemnity, do you know how much you would pay if you were hospitalized tomorrow? Do you know if your plan currently covers ambulance transportation? And then you set up that math equation. Would a $2,000 hospital bill create financial stress for you in the event that that happens, right? Looking at cancer, heart attack, and stroke, if you were diagnosed with cancer, do we know what your plan would and would not cover? We take a look at their maximum out-of-pocket, co-insurance, co-pays, whatever it may be. Then have you considered the non-medical costs? If you're sent to a different state, if you have a loss of income and you're paying for travel and lodging or that income gap, how would you plan to protect yourself in that financially stressful situation? And then lastly, if I could provide you with a $20,000 check automatically when you're diagnosed with cancer, is that something that would help you focus on recovery instead of focusing on the financial bills and expenses? And then lastly, with home health care, do we understand what your plan covers for home health care? How would you manage to pay for care if you ended up needing it? Do you have a plan in place, right? Do you know if your plan covers the custodial care, the home health aide, the caregiver coming out to your house? And then lastly, remind me, do you fill your prescriptions monthly or quarterly? Because with 4 prescriptions getting filled every single month, that's $60 I can get right back into your pocket, right? So again, asking the right questions, identifying their needs, and helping them to identify their own needs here. And then from there, positioning the product as a solution. So we'll look at a couple of those math equations. With hospital indemnity, an individual with a $295 copay days 1 through 6 in the hospital, a $260 ambulance copay, and maybe an emergency room visit that copay is waived since they were later admitted to the hospital. They're subject to paying $2,030. With a hospital indemnity at Heartland National, we could give them $2,150 in cash directly into their pocket, right? Same thing with cancer, heart attack, and stroke over here. This top table is showing medical out-of-pocket costs for a 65-year-old client on a Medicare Advantage plan that's diagnosed with cancer. That bottom table is showing the non-medical out-of-pocket exposures, again for a 65-year-old on that same Medicare Advantage plan. So the top is looking at their inpatient hospital stays, chemotherapy, radiation, their specialist visits, going for follow-ups and going to see their oncologist, and then the prescription drugs for anti-nausea drugs, pain meds, whatever that may be. We're looking at over $6,000. They may have a maximum out of pocket that's less than that, right? They may only be subject to paying $4,500 or $3,700, whatever it may be.
Or more.
Right, or more, exactly. And then if we scroll down here and look at the non-medical costs, we don't have any protection against this, right? If you do have travel to a cancer center, if that's gas, just a 30-minute commute, or parking while you're there, meals during treatment days, unfortunately, you're not eating a home-cooked meal. You're likely ordering food to the hospital or running somewhere quick that's nearby. Lodging, if you are sent to treatment out of the area and you're paying for a hotel or an Airbnb, that's an expense that we don't have any protection against, right? That's completely out of pocket. Help at home, if you have children that you're now paying childcare needs, if you have cleaning, errands, lawn maintenance, whatever it may be. And then of course the missed work or that income gap if you do have a loss of income. Here we're looking at more like $8,600 just using the averages of all of those estimated costs, right? So again, putting it into perspective for your client with a math equation, I don't mean to scare you with this, but I want to help you understand this plan isn't encompassing every cost that's associated with cancer. There are several out-of-pocket costs that are non-medical in nature that we need protection against. And then when it comes to explaining the benefits, I'll zip through this really quick. Again, how can we explain some of the high-level points of this plan at a level that our client understands and the things that are most important to them? So when we look at what cancer, heart attack, and stroke has to offer, it's a lump sum payout in cash directly to you as the policyholder, right? When you receive a cancer diagnosis, we are signing you up for a plan that's going to give you $10,000 in cash. We have built-in recurrence and restoration benefits. You're not paying anything additional to have that benefit in place. If you have that hesitation of putting money into a policy and never needing it, we have that return of premium rider available for you. And then lastly, it's issue age rated. This is a premium that is not increasing as the client ages. Next, looking at home health care, remembering we have built-in home health aid protection, built-in prescription drug reimbursements, a 180-day restoration. If they do use up all of their benefits, go into that restoration, they'll fully restore. And then again, these are fixed benefits, regardless of their copay, getting paid in cash directly to the policyholder, right? So in the event that they don't owe anything for their physical therapy home health care service, that's still $300 that's going directly into their pocket. So it's cash, it's fixed regardless of their copay. There's no coordination of benefits is another way to word that. And then lastly, with hospital indemnity, of course, this is a flexible, customizable plan. There's no network or any restrictions that we work within. It has that 60-day restoration benefit. And then again, it's cash paid directly to the policyholder, just like any of our other plans, with some built-in benefits for emergency room visits or observation room benefits. And then lastly, when it comes to overcoming those objections, what are some of the common objections we see and how can we combat this, right? So with a hospital indemnity, won't my plan cover that? I thought my Medicare Advantage plan would cover all of this. Remember, this is a high copay that's going to reset every period of care. If you end up in the hospital once and then back 3 months later, that's a copay that's going to reset. And then something we see a lot with any of our plans really is I'm healthy right now. I don't need this coverage right now. I can always think about it and add it later on. Something I would say to that for hospital indemnity and cancer, heart attack, and stroke is that makes now the perfect time to apply. You're healthy, so we know you can qualify. But along with that, this is the most affordable that premium will ever be, right? If we decide to wait 5 years down the road, you're risking changes to your health. What happens if you have a cancer diagnosis in 3 years? But also, you're subject to a higher premium at that point. So if we secure this coverage right now, we know you're protected from this point forward, and this is the most affordable that premium will ever be. Lastly, with filing claims, we touched on this. Submitting via email, fax, or mail for hospital indemnity, it would be an itemized bill. For home health care, it would be a physician certification. So a doctor signing off, you either have a cognitive impairment or the inability to perform at least 2 out of the 6 ADLs, along with the itemized bill from the home health care or service provider. And then with cancer, heart attack, and stroke, a cancer diagnosis would be a pathology report. Heart attack or stroke would be an itemized bill from the hospital stating you had a heart attack and that's why you experienced a hospital stay. And then of course, if you ever have any questions about if a bill looks correct, you're not really sure exactly what to submit, what to ask the hospital for, reach out. I'm happy to help. You'll have my cell phone number here on the next slide. There it is. I figured it was next.
Like I should drum roll, like.
Yes, drum roll, please. So please feel free to save my cell phone number to your phone. If you want to text me right now or after today's call and give me your name, I'll save you to my contacts. That way I know exactly who's calling moving forward and I can do everything I can to best support you.
Yeah, this is really important. These relationships, that agents have with their carriers is so important, because we are all here to help you, like never fail in front of the client. Like that's definitely one thing we stick by here at Eldercare. And I know like we're always here to answer the phone, but it's also really good to have, your carrier resource at your fingertips as well. So screenshot this, save it.
Save it, reach out. Let's chat.
I know we're at time. I know we're like way over time, but I'm gonna ask a few questions real quick. Katrina, is there a client presentation if they did an event on any of these products?
Katrina, I'm happy to put something together for you. Most of the slide decks I use are agent focused, so training agents on how to sell this product. However, I'm more than happy to help put some slides together depending on what products you're interested in having that for. That way you don't have to do the legwork. I'll put it together for you and just send you a copy.
Awesome. I'm sure she wants that. She does a lot of events.
Absolutely.
Adam asked during the restoration, is it the full benefit restored at all at once, or is it a sliding window?
For home health care, I assume.
He didn't ask the specific product for
I can
restoration.
go over both. So for the
He
recurrence and
said yes, home
restoration,
health.
yes, home health care. Yes, so it's all after you have that 180-day restoration period or waiting period. Essentially, after those 180 days are up, you have another set of 360 days worth of benefits. So restores back to 100% after that 180-day waiting period.
Cool. And then Adam, he's wanting a presentation for the chamber as well, and we can help make you something specific
Yes.
for any presentation that you're doing.
Yeah. That way we're not teaching our clients how to go out and ask the effective questions for a hospital indemnity. We can make it focus more around them.
Absolutely. Okay. Well, is there any last things you want to add before we give everyone their day back?
I'm all good over here. I know I talked everyone's ears off for over an hour, so I appreciate you all for being here. And I'm just looking forward to supporting your success, whether it's throughout AEP or for years to come. So please utilize me, lean on me as a resource. I'm here to help and look forward to connecting with all of you personally.
Yes, absolutely. Thank you everyone for taking the time to be here with us this morning. If you are not contracted, we will be reaching out to you after this webinar. We will be reaching out to help you get set up and make sure that we have all your questions answered and all the supplies that you need. So thank you, everyone. Hope you have a great rest of your day.
Thank you.
All right, bye.
Bye-bye.